Hello, my name's Gord Neal. I'm the CEO, President, CEO, and Director of World Copper. We trade on the TSX V as WCU and the OTC as WCUFF. I am going to just go through the presentation right now. World Copper has assets in Arizona and in Chile. So I'm just going to walk through the presentation and then I'll have a conversation with Jasper after that. Anyway, I will be making some forward-looking statements, so you are to be forewarned about that. So I'm not going to spend a lot of time on this slide, but the state of the copper market is fairly obvious. The supply and demand is way out of balance. Prices are rising as a result of that imbalance. The amount of mine supply that we have coming on between now and 2040 will not meet the needs of our copper demand. And the projected demand in net zero scenario, you can see on the bottom right-hand slide. Again, we will have to move very quickly, and I don't believe that we will make net zero 2050 targets, but we've got to try, and copper is a big part of that. So size matters. 85% of all refined product, copper product, comes from sulfide concentration. These are concentrator mines that have flotation circuits on them, and they are big mines. They take 8 to 12 to 15 years to build and permit, and they cost billions, anywhere between $2 billion and $6 billion. Only 15% of the global copper production is made from oxides, and we are an oxide project at Zonia. And so, we're looking to develop projects and that are fast to market, nimble. We can get to market faster, quicker, and put things into production much more quickly, and economically and environmentally. So size does matter. We're smaller than these bigger concentrated sulfide mines, but we have copper that we can produce really quickly, and that's important. So copper is made in America. We are in Arizona. Arizona is ranked 7th in the Fraser Institute in the mining. It produces 71% of all copper produced in the United States, and copper is on the critical list in the United States. You can see where Zonia is. There are 10 other operating mines around us. It is a copper-centric and a copper-friendly place. And so it's a great place to do business, a great jurisdiction. So why is Zonia important, and why do we think that we have an advantage? And we do. We have existing infrastructure. We're on private land, and we're a past producer. That means we can get our permits much faster than, say, a concentrator or a sulfide mine. As I said, sulfide mines permitting takes 5, 7, 10 years. We can get our permits in 30 months. We have power on site. That picture, the top picture on the right, is the power lines that run right through the project. And we have water on site. The middle picture is one of the wells that sits on our property. That's the middle picture. And it's pre-stripped. The bottom long picture, you can see a ridge in the center of that picture that's got a reddish hue to it and sloped at about a 45-degree angle. That's ore sticking right out of the ground. So it's been pre-stripped, and it's ready to blow up and push into the crushers right now. It's an oxide porphyry. Oxide porphyry, as I said, is low environmental footprint. We're nimble project size. It reduces execution and permitting risk. And the end product is a copper cathode produced on site. There's no smelting, there's no tailings, and we produce a cathode that gets a premium to the spot market price of copper. Another advantage of Zonia is we have early revenue potential. We found 2 reports that have told us that the last producer, because it was a past producer, they left copper metal on the leach pads that was not produced, was not processed. So the reports tell us they're different reports, and they give us different metrics. One of the reports says we have 26 million pounds of copper sitting on the leach pads. The other one says 55 million pounds. This could mean, and we have to verify this, but if and when we verify it, which will be by the end of this year, that could bring us an estimated $100 to $200 million in revenue before we even get up and running on producing out of the pit. We also have expansion upside. In these stories, you have to have blue sky. You have to have the room to grow, especially at our size. We have 1 billion pounds of copper in a global resource, but it would be nice to have 3 billion. And I think we could do that because our land package is triple the size of our private lands. And we have to expand, though, we have to do some infill drilling and some step-out drilling to make that a reality, but there's plans for that as well. So I want to just focus on that pre-production revenue that's potential on the leach pads. On the right-hand graphic there, you'll see a green area. That's the pit. That's the existing pit. This is all on private land, and those three red polygons to the left of that pit are the heap leach areas. On that area, on those pad areas, we have 700 million tons between 0.5 and 0.6% copper. It's already crushed. It's already on the leach pads. It could be between 26 to 55 million pounds. We're going to run a verification program drill program to verify the material is there. It'll cost about $500,000 to $700,000 US. That's not very expensive for a drill program, particularly if you're trying to verify that you have $100 million worth of metal on those leach pads. It would be, I don't know if we have it in this presentation, but it's we've advanced the planning, and it's 33 holes, 1,600 feet of drilling. You're not really drilling in a conventional drill program here, looking at rock that's on strike and dipping at a certain degree, and you're trying to find the mineralization. We're fairly certain the mineral is there, and we're just drilling on the existing leach pad on crushed ore. So you need to do reverse circulation drilling, 33 holes, 1,600 feet of drilling. Probably take us, it's not a lot of drilling. The drilling will take us a little bit, it's a little bit different than conventional drilling because we have to find where they laid it. They laid it down years ago, and we have to find where it is. Years ago, they didn't have GPS on the trucks to tell them exactly where they laid loads on the leach pad. So we're going to have to find where it is from these reports. So again, for us, this is a potential game changer in terms of providing pre-production revenue at that level of between $100 and $200 million. Oh, I actually do have it in here. I'm sorry. We just redid this presentation, and so I wasn't sure that we'd put this up on the web. So the three leach pads will have rows of drill holes across 100 meter. There'll be 100 meter spacing, 33 drill holes, 1,600 feet in RC drilling. We'll do metallurgical testing. We'll do an economic evaluation. The cost is $500 to $700. It'll take 4 to 6 months. I mean, it's not a lot of drilling, but because we have to drill and then send the material to the lab to get the results before we move further in drilling, because we have to know we're drilling in the right place. It's a little bit unconventional. It'll take some time, but if it does, we're confident that we can make sure that or confirm that this material is on the leach pads. So this is a cross section of the pit and the mineralization. You can see that black line that's a conical shape. It goes through. That's the outline of the oxide or the pit itself. That's the whittle pit design. Underneath that, you can see the oxide. That copper or that gold color line is the transition area between the oxides and the sulfides, and you can see the sulfides are lower underneath the red line. Those pinkish area where it says high grade future starter pit, those are grades that are higher than 0.5%, 0.5% copper. From a pit situation, in a pit scenario, that would be very good high grade, and that is where we would start when we get back into the pit situation after we look at the leach pad viability. We just updated our resource estimate. It's now, our M&I is at 113 million tons copper content. That it increased by 50% from 75 million tons. And it takes us to 686 million pounds of copper. And that has now significantly increased our life of mine. The last life of mine in the PEA was 9 years. With an increase of 50%, we are now fairly confident the life of mine has now been moved to 15 years. You start moving from 9 years to 15 years and higher, you start becoming attractive, and you start adding to your M&I. And we've got, like I said, 1 billion pounds of copper in both categories, but we've got 686 in the M&I, and you start moving toward that billion pound in the M&I, and you become attractive to other players in the business. This increased value of the deposit lowers the risk and advances us toward our feasibility study at Zonia. Land position. So the blue area outlined there is the private land. That is the area that we can get permitted quickly. All the black dots inside of that red area, that's actually the pit. But all of the blue area is private land, and that allows us to the southwest there to put a new leach pad in that area to process the material on the old leach pads and actually have our new leach pad area for the production of the pit. So it's again located on private land, 10 years plus production in phase one. We actually that should actually be more like 14 to 15 years. It's faster to permit because it's on permit land only. Phase two is everything outside of those blue areas. All of that is BLM land. Now, that's Bureau of Land Management land. It's federally owned. It's ours. We have the mineral rights to it, but to get permission to work on it takes a lot longer than private lands. It's about a 5 to 7 year process. But if we work to get our permits for the private land and get into production, and it's a 10 to 15 year mine life, we would start our permitting on the BLM lands in the next year or so that we can have it ready by the time we're halfway through our production cycle in the pit on the private land. So the team, Derek White is our lead technical advisor, and interestingly enough, I actually joined this company because of Derek. Derek, I met when I helped to get him on the board of Mag Silver. Derek has built 5 copper mines. He built Sierra Gorda for KGA. He was the CEO of KGHM. He built Sierra Gorda, the Frankie Mine, Colorado, and Premier Mines. He is a consummate mine builder. He came to me 2 years ago and said, "Do you know the guys at World Copper?" I wasn't at World Copper at the time, and I said, "Yes." I introduced him to the people at World Copper and sat in on the meeting, and he said, "Zonia needs to go into production." And he said, "And here's why." He said, "Copper is now trading at about $3. Within 2 years' time, it'll be trading between $4 and $5. He said, your Zonia is on private land with power and water, and it's pre-stripped. You could make a production scenario of 70 million to 100 million pounds of copper a year out of Zonia profitably, and I would like to help you do that." And so 2 years later, I joined, and I walked right over to his office. One of the first things I do, and I said, "Do you still believe in Zonia?" He said, "Yeah." He said, "That was 2 years ago, and copper's at $4.50 right now. So, the MPV of that project has skyrocketed, and we should put it in production, and I will help you." So he picked up Joe Phillips, who's on the right there. He's a senior advisor. He's built 14 mines in 11 countries, a lot of them copper mines, focused on SXEW, which is going to be our production profile, and operations will be solvent extraction electrowinning, which is SXEW. Christophe Napwala worked for Derek at KGHM and helped him build Sierra Gorda and Frankie and Carlotta. So he's actually, I know Derek's an advisor and works as the CEO of Premier, but Christophe works for me and is going to be taking direction from Derek and Joe on how to put Zonia into production. Stuart Ross worked as the CEO of Cardero Resources. Cardero was the previous owner of Zonia, and so he has a vast knowledge. And in fact, he was the one who found the two reports that told us that there was 7 million tons, or an average of 35 million pounds of copper sitting on top of our leach pads. John Drober is our head geologist. He not only has been the prime geologist at Zonia, he also found Escalones, our Chilean asset, and brought it into the company. Myron Smith worked with Derek White at KGHM, and did the permitting at a company called the Carlotta Mine, which is a SXEW in Arizona down the road from us. And we may be we're working with them on potentially getting some of that mine is running out of ore in 3 years, and some of their equipment will be up for sale. So we are talking to them. Sue Bird is a resource geologist. She worked with Derek as well. She just did our resource update and is familiar with the area, and Carlotta as well. And George Dermer works with Sue in doing the modeling. So this technical team is a first-rate technical team for Zonia. So two-phase approach. While we're going to be working two tracks at the same time, and we're going to de-risk this in phase one on the private land. The resource update just happened, so that's 2024. Leach pad testing, I will hopefully get done. It's 4 to 6 months, so maybe early next year. But we're going to get started shortly. Permitting has already started. And we hope to be able to by Q1 and Q2 be well along the way of having our permitting done. Like I said, it takes about 30 months. To get the permitting done on the private land, and we'll hopefully be halfway through by Q2 of 2025. We hopefully will by Q3, Q4 have the bankable feasibility study done by that time. Engineering in 2026, which is the following year, and we'll have our permits received in 2027, which will allow us, once we verify that material that's on the leach pads, to take that material, move it to the new leach pads, which we're planning in the southwest part of the private lands, and process that material so that we can get that revenue before we even start construction. At the same time as we're going through phase one, we'll be doing phase three, phase two on the BLM lands outside the private lands. So exploration, we'll have to do exploration, and I'll show you where that exploration is going to happen in the next few slides. It's really to the northwest. It's to the northeast. It's called Zonia North. We do have 4 holes in that already, and it's telling us it's the same rock type and mineral tenure as the private lands, but we need to drill it more to get a real resource and get our arms around what that mineralization and what the resource looks like outside the private lands. So we'll be drilling Zonia North in 2025. That may get moved to Q2, Q3, that drilling, but we'll see. Depends upon available capital. We'll have a new mineral resource as a result of that in Q3 through Q4 of next year. 2026 should be met testing in 2026, where we're actually doing on-site bench testing on the old leach pads. So we'll be taking ore out of the existing pit, crushing it, sending it to a small temporary leach pad on the old leach pads, a new leach pad area, and we will get real-time data on what our recoveries are by doing that, rather than sending the material to the lab, which most people do, and there's nothing wrong with that. For us, we want to get real-time, real-world results for our recoveries. And like I said earlier, by 2027, within 3 to 4 years, you're going to want to start the permitting on the BLM lands, because it takes 5 to 7 years to get those permits. So by 2034, you're going to want to have those permits. We won't start really processing or permitting or building until 2028 with our SXEW on the private land. So it gives us enough time to get ready to permit to move on to the BLM lands from private lands. So SXEW is solvent extraction electrowinning. It's a very simple mining process. I really call it a chemical plant. This is going to be my first build, and that's why Derek's helping me. But if it is going to be my first build, I have a chemistry degree, and it's a very simple process, and it's a very environmentally friendly process. It's open pit mining, standard heap leach processing. There's no in situ leaching. We have low acid consumption, as the production profiles have shown us in the past, at 25 pounds per ton, which is very low. We have 73% recoveries, which we have in our metallurgical test. We think that we can get that to a higher level. hopefully 80% recoveries. We think we have a way to do that. We're working on that now. There's no smelting, so it's a cleaner process with no emissions. There's no tailings. It's a smaller environmental footprint. There's a low strip ratio because it already is pre-stripped on the private land. We have a domestic supply chain with acid nearby, power, water, and labor, and we will produce a 99.9% pure copper cathode, which is sold, as I said earlier, at a premium to the spot market. And only 15% of global copper supply is produced from oxides. So in 2018, there was a historical PEA that was done. Base case is $2 a pound pit shell and $3 copper price. At $3 copper, the NPV 8% discount of Zonia was $192 million with a 29% internal rate of return and almost a 3-year payback. Cash flow, cumulative net cash flow after tax is $331 million. Life of mine plan 90 million tons of 0.313 copper based on historical MRE. Low strip ratio, as I said before, and the Capex at that time in 2018 was $240 million. I would say that Capex, if you look at the inflation, cost of goods, supply chain issues, I would move that these days to 300 million. But if you're looking, you remember this is the numbers on the left are based upon $3 copper. The NPV moves at $4 copper, which is today's price is $430, to a $477 million NPV at an 8% discount. So one of the reasons Derek came to the company 2 years ago was he recognized that $4 copper was inevitable and that the value of projects like Zonia were actually just going to get greater. Metallurgical Testwork, we've done met tests. They were done in 95, 2008, 2011. The master composite size was P80. P80 size, 225 millimeters, was 77%. That was extraction, but the overall extraction for the deposit was estimated between 71 and 75. That's where we get the 73% average. But I think that we can do better, and we're working on a way to optimize the grind to get better recovery. Okay, so I was talking about blue sky and how do we make it bigger? The image to the right shows a polygon on the northwest portion. That we call that Zonia North. Sorry, that's the northeast portion. That's Zonia. That's where those 4 holes that I was talking about before were placed. And we came back with 0.35% copper out of those holes. And you can see to the southeast, so to the southwest, where the private area is, it's sort of outlined in white there. You can see where all those drill holes are. That's the private land area, and that's where our 113 million tons or 686 million pounds of copper is. But we have a land package that's 3 times the size of that private land, or 3 or 4 times. So we're going to drill in Zonia North, and we're going to make this thing bigger. And as we get bigger, as long as the economics hold up, and again, the only caveat that I would say about drilling in the private lands is they're not pre-stripped. So I'm hoping that the 0.35 that we got in Zonia North holds up, because that will add to the ability of the project to remain economic. The private land and the pit are economic right now as it stands. Drilling to the north and on the private lands, we need a little bit more grade, I would say, given that there's overburden there that needs to be moved out of the way. The land package, it's a textbook porphyry that we got out of the drill core in Zonia North. The area is 1.5 kilometers by 2 kilometers. It's the same quartz monzonite porphyry, same host rock as the private lands. And we have a permit to drill there for 5,000 meters. We just need to post a bond for it, so we can start drilling there whenever we want. The need for carbon neutrality. I mean, there's a way for us to get to carbon neutral. We already have power on site, but we could augment that with solar. We could use biodiesel fuel trucks or electric trucks and diggers, and we could buy some carbon credits. Providing copper to the mix of this decarbonization goal that we have is something that we're proud to be a part of. Trying to make the operation carbon neutral, we would like to see if that will work. However, the caveat here is if getting to carbon neutrality means that we have to give up a profitable or being profitable and being standalone, being able to support ourselves, then I would have to cut back on some of those things because I really don't want to go into debt or use public equity to make that goal. But if we can get part of the way there, then we would like to look at moving toward carbon neutrality. In our peers in Arizona, we stand out again. Cactus, Copper World, Copper Creek, and Santa Cruz are our neighbors. Our Capex is lower, much lower than most of them. Capital intensity, no flotation. We have there's no tailings storage facility, and we're already pre-stripped. So our capital intensity to make it work is much lower than our peers and competitors. We're an open pit oxide leaching brownfields, so the risk is low there. Production profile is 50 million pounds a year. Compared to our competitors, it's lower, but we get a better return. Our payback time is much faster. So we are smaller, but we can move more quickly and get into production and be profitable before anybody else. Again, this is a reiteration, but we have the right infrastructure. We're accessible by road. We have power and water on site. Railway is only the rail access is 10 miles away. We have permitting, first permit, 10 years of production on private land. It's a brownfield site that allows us to get our permits in 30 months. Emissions, 99.9% copper cathode on site, low emissions, no smelting, no tails. And the location, the domestic supply chain is nearby, and we're in the right location in the right jurisdiction. So our Escalones project is in Chile. It's much bigger than Zonia. It's 3.4 billion pounds of the copper. Now it's in the inferred resource. We'd have to move that up to de-risk it and add value. PEA production is 50 kilotons of copper over 20 years. Has an NPV of 1.5 billion at an 8% discount, 46% IRR at 360 copper. High exploration potential. There's porphyry targets all around us. It's 100 kilometers southeast of Santiago, so it's near it's near infrastructure. It's 35 kilometers east of El Teniente, which is the world's largest underground copper mine. Infrastructure, there's road access, there's power. There's power actually on site because there's a gas pipeline that runs through the project. It's close to seaport, and it has a very low strip ratio of 0.9. The only thing that it's missing that Zonia has is water, but there's always a water problem in Chile, up in the Altiplano and in the high desert. But we do have Capstone is building a pipeline from its desalination plant not far away, and the project could probably tap into that and get water. And there's 28,000 meters drilled, 56 core holes, and that was done in 2022. And so the inferred resources, you've got 426 million tons at 0.36. It is on the cutoff at 0.13. The strip ratio, as I said, is 0.93. 0.36 copper grade inferred, giving you 3.4 million pounds of copper. This is an exceptional project, and particularly that it's an oxide of this magnitude. The only infrastructure issue had is water, but that can be overcome. And the only other issue that it has is that, unfortunately, the Chilean government put Escalones into a sanctuary of nature in November of last year. We don't really know what this sanctuary of nature means because they haven't really described it to us. But what we do know is that what we surmise is that permits that take in Chile take about a year to 18 months to get to drill. I suspect it'll take longer, 2 to 3 years, to get permits. The problem for us is to de-risk this and to move it into the M&I category from inferred. I need to drill it. If I can't drill it, I can't add value and I can't de-risk it, which means we have option payments that are due on this. And so we're currently renegotiating those option payments to take into account the inability to drill, because I'm not going to pay money to an option or if I can't advance the project. I don't know how much more valuable I can make it. So we're sort of paused on Escalones. So that's where we are in Escalones. So my background, Gord, Neal. I started in the business in 2003 with Mag Silver, and went and was VP Corp Development there and for Silver Corp, and then became president of New Pacific. And I've been lucky in my career in that I've been handed excellent assets. I mean, Mag Silver's one of Scipio, Valdecañas, New Pacific's Silver Corp being New Pacific's Silver Sand, and um, its assets are incredible, and so I'm lucky. And then I get handed the Zonia. Escalones is a good asset. It's hard to move it forward. Zonia is an excellent asset. John Drove is a head geologist. John's been doing this for 30 years. I've been working with him for a long time. He is a great head geologist. Marcelo Awad is an executive director in Chile. He's actually helping me with Escalones as I speak today. But he worked he was the CEO of Antofagasta for 8 years, and he's now working with Wealth Minerals in Chile. I talked about Christoph. He worked with the CEO with Derek White as a CEO of KGHM, and Marla is our corporate secretary. Hank Van Alphen is the chairman. Hank is the one who kind of brought me in here and asked me to take the helm of World Copper. I've known Hank. Hank worked with founded such companies as Corrientes and Cardero Resources, where Zonia came from, Trevally, Balmoral, International Tower Hill. He's raised over $1 billion for resource companies. I just talked about myself. Bob Koppel is our largest shareholder. He's actually a lawyer and a real estate, I'll call him a mogul, out of California. He loved both Zonia and Escalones, and has been a solid, loyal shareholder for a while. John Lotz is a member of the bar. He's a lawyer. He's a securities lawyer. He's been working with Cardero Resources for years and knows all the projects, so I'm glad to have him. Keith Henderson, I worked with Keith Henderson at Dorado Resources. I was on the board of Dorado with Keith, and he is now the president CEO of Latin Metals and focused on Argentina and Peru. Tim McCutcheon is a capital markets. He's actually a banker who worked he had a fund in New York, DBM Capital Partners out of New York. It was a boutique mining resource merchant bank, and he's raised a lot of money in this sector and is really well heeled in the mining sector. So structure, we have 201 million shares out. Insiders own 43%. Public float is 31%, and restricted shares is 26%. Outstanding warrants 62 million. Broker warrants 800,000. And options are 17 million. My world typically is taking companies from 50 million market cap to, let's say, 2 billion. This is a little bit unusual for me. I'm sitting at 7 cents today, I think, and 14 million market cap. That doesn't scare me because I know the asset that I have is worth 20, 30, 200 times that. So So this just tells you where we're sitting in our peer valuation gap. Again, Arizona, Sonora, Faraday, Cochrane, Marimaca are all in Arizona. You can look at the stages; they're all PEA development. Our market caps are quite diverse, and then our NPVs are quite diverse, and our price to NPV shows you that we have a lot. There's a lot of value upside for us compared to our competitors. My job is to unlock that value, and I have done that before, and my plan is to do that again. Yeah, I don't have my name on here, but I'll give you my name and phone number, my name and email address if you want to contact me directly. Because as far as I'm concerned, um, the shareholders of World Copper are the only reason that the company exists. So if somebody has a question or a problem or a query, they can get a hold of me directly, but I'll provide that at the end of the conversation here.
Gord, could you tell us about yourself and your career?
Yeah, I know we went through it on the presentation, but again, I started in 2003 with Mag Silver. I bumped into a guy named Peter McGaw, and Peter Peter was actually the founder of Mag, and he and a woman named Grace Toe approached me and said, "Can you find us somebody to help us with corporate development for Mag?" And I went out and I looked for people, but the job that I had at the time, I had an argument with the CEO and I left. It was Westport Innovations, and I was running corporate development for them. And I went back to Grace and Peter and said, "I think I found somebody. I think it's me." And so they went, "Okay, we'll take you." And I wound up running the investor relations and corporate development division for Mag Silver from 2008 to 2014. And so in that time, I brought Dan McGinnis on as president and CEO. Dan, Peter, and I wound up, you got to give, as I said earlier, it really, what drives value is good assets. I mean, and grade is king. So Peter had found the Juanicipio vein at Mag Silver in Juanicipio and Fresnillo in 2000. He drilled it in 2000 and I think he drilled it in 2002. Anyway, when you got grades of 500 grams per ton silver with some gold, but 500 to 600 grams per ton silver is your head grade, you can't lose. You have to be an idiot to mess that up. So I was lucky to be able to take this asset and take it from a $50 million market cap. I think it was trading at 50 cents when I started. When I left, it was trading at $18.50. So we built that company again. I helped to bring in the investor base, look at different projects. We picked up the Cinco de Mayo project under my watch with Peter's help. And so having that team I was extremely fortunate to start with that team. Then after 8 years, almost 8.5, 9 years, the company, I said, okay, that's enough for me. I'd done my bit. I'd made money myself. I'd made shareholders a ton of money, made myself a ton of money. And I said, it's time to go. So I left, kind of took a year off, didn't like retirement. And I bumped into a guy who was working with Refang at Silvercorp. And I wanted to learn the production side of silver because I'd just gone through a very good exploration lesson with Peter McGaw and Dan McGinnis. So I wanted to learn, who would I learn a good silver production story from? Well, if you look at all the silver producers in the space, one of the best producing companies in the silver space is Silvercorp. The guy is constantly paying dividends. He makes money every quarter. He hasn't done a share issuance since 2011, I think, 2010. He hasn't had to because he makes so much money. The only negative for Silvercorp is that it's in China and it trades at a discount because it is in China. but his operation, it's a narrow vein, underground, high grade, 300 gram per ton silver operation. But that guy makes, I mean, narrow vein dilution can kill you in the narrow vein business, and he knows how to mine. And I learned a lot from Ree. And so I spent from 2016 to 2021 or something with Ree. Sorry, that's not true. 2016, 2017, I was with Silvercorp working on the production side, but then Ree found Carangas and he found silver sand at New Pacific in Bolivia. And he looked at me and he said, "You done a great job, but I can't run two companies. I need you to help me. You need to run Bolivia." So I went in 2017 and ran New Pacific from 2017 to 2022. And again, took that, and those assets, again, were stellar assets at surface, open pit mineable, 130 gram per ton silver. And we took that from $75 million market cap, or I did, to 1.2 billion over a 2-year period. Now, it's a different market than it was today, 2017, 18, 19. So it was, these were formative experiences I had in the mining space, in the resource space, with Mag Silver, Silvercorp, and New Pacific. Then I got to the place in New Pacific where I couldn't go any further. I'm not a mining engineer. I can't build a mine. I couldn't build a mine at the time. So I said, look, we have to find somebody to take my place to take New Pacific forward. And they found somebody else. And I stepped aside. But then 2 years later, I wound up going into Hank Van Alphen's office and saying, I still like what I do. I like Zonia and I like World Copper because Derek White came to me and said, this thing can be profitable and it needs to go into production and it's an excellent asset. Again, another excellent asset. So Juanicipio, Valdecañas at Mag, Carangas and Silver Sand at New Pacific, Ying at Silvercorp, and now I've got Zonia. I mean, Zonia could have, and we'll verify this, $100 million worth of metal just sitting on a leach pad. I mean, holy crap! I mean, that's a really great opportunity. So that the next chapter for me is to bring in a Derek White and a Joe Phillips and walk behind them and beside them as we build Zonia.
How many common shares, options, performance units do you have? Of World Copper, and how meaningful is it to your net worth?
I own 3.8 million shares of World Copper in shares. I have 3 million options, and I think their strike price is 7 cents or 8 cents. I don't have any performance units, and I must have warrants. I think I probably have 1.4 million warrants because I bought 3.8 million shares of the last financing, and it was a half warrant, so I must have 1.4 million warrants. And those warrants would be at 17 cents. So I'm well invested in this, and I'm still buying shares of World Copper. Not on a daily basis, but monthly I'll buy some shares.
You've already told me you have a robust management team with other technical advisors and also a robust board. But so, do you feel that you have what you need in order to do the feasibility study and the drilling and other exploration work that you're planning to do? Or do you think you have to, is there some quality or that you would like to sort of beef up the team with?
No, I have a very good team. It's in these markets with my market cap and my treasury, I do need some more capital. I don't really want to do financing at these levels, so my job is to move it a little higher so I can get some more money. I have capital, but not enough to go in to do my BFS. But I have a team. My team is a very experienced team in that I just went through my background, but having Derek White help the guy that built Carlotta, which is just down the road. And in fact, one of the reasons I think Derek sort of took on the task was he really enjoyed building Carlotta, and it was a good team, and they did it on time and on budget. And now that Carlotta that Carlotta SXEW is running out of ore in 3 years, so that team needs to move somewhere. So he said, Gord, let me take this team and give you. We with this team we get real time information about an SXEW production operation. So we're not guessing at what things are going to, what kind of recoveries we're going to get, or what kind of processing flow, what the flow sheet looks like, what the percolation time, what the heap leach time is going to look like. They have real time experience. So I got Myron Smith from him, who helped him build Carlotta. I got George Demmer on the modeling, who helped him at Carlotta. I've got Sue Bird, who helped him on on that. I've got uh, Byron Linton Lynn Williams from Carlotta, who's their metallurgist. They all still work. Particularly Lynn works for KGHM still, but they've allowed them, because that mine is shutting down, to come and help us with our startup of Zonia. So I have real world, real time experienced people who are currently working on an SXEW 100 miles away, who are helping me build one at Zonia.
So then I think it would be good. I mean, could you just walk us through quickly the history of World Copper and how you got to where you are today?
Yeah, it's fairly short, because World Copper really only started in January 2021. And it really is a combination. What World Copper had in 2021 was the Escalones asset in Chile. But what they decided to do was combine the World Copper's Escalones, that asset, with the Cardero Resources, at that time owned Zonia in 2021. And so they combined, they folded in Cardero Resources into World Copper, which gave you two assets of Zonia and Escalones in 2021.
36% of the shares outstanding or restricted. To whom do these shares belong?
In that transaction that happened with the combination of Cardero and World Copper, Wealth Minerals owned a whole bunch of those Cardero shares, and they converted into World Copper shares in that transaction. So Wealth Minerals owns those 26% restricted shares.
Okay, and when you say restricted, I mean, could they? Is there a certain holding period or a lockup period, or?
They're locked. They're just locked up. They're in a lockup. They can't be sold unless they have to go to shareholders to get them unlocked.
But so besides Wealth Minerals, who are your core shareholders?
Well, we don't have a lot of institutional shareholders. Really, the core shareholders are Wealth Minerals, as you just pointed out. Bob Koppel, he's a director, as I pointed out, he owns 19.9% of the company, and then all the other insiders are myself and the John Drobe and all of the rest of the employees own or are insiders up to 43% of the company. So you got 20% with Koppel, 10% with Wealth. Wealth used to own the 20%, but it's now been whittled down with these placements to 12%, and then the balance of that 43% is myself and the rest of the employees of the insiders. So the insiders own 43% of the company.
Outstanding warrants that you have. What strike price, expiry dates are those? I think it was 62 million.
The outstanding warrants are 62 million. We've got outstanding broker warrants of 800,000 and outstanding options of 17 million. The strike price on the warrants are 30 cents and 60 cents, and they expire. I have expiry here. They expire between April of next year and November of next year. And those are primarily 60. They're a blend of 30 and 60 cents. A third of them are 30 cents, and the other 2/3 are 60 cents. And they all expire between April of 2025 and November of 2025.
Could you explain your financial position with regards to cash and working capital, etc.?
Yeah, we got about 1.2 million in cash right now. My burn is about 150,000 a month, which is actually pretty good for the amount of people I have. But the team that's helping with Zonia that are from Carlotta, they've been very they don't work full time because they're consultants, and their consulting fees are actually quite reasonable. So it allows me to keep my costs down, and we don't have a big team in house here. I've got myself and Christoph and John and Stu, and our one accountant. So we have 5 employees in house, and I've got maybe on the consultant side, I've got 5 or 6, but they are very manageable because I've also got Tino on my site manager down there, but again in Arizona. But it's not very expensive. So at 150,000 a month with 1.2 million, I've got a little bit of runway. But again, if I'm talking about doing a drill program, a verification drill program on those leach pads, that's $1 million Canadian right there, and I'm talking Canadian dollars, right? So what my plan is to do some marketing and to get the share price up to, I had it at one time at 35 cents. I've dropped back down to 7. I'm pretty confident, given my historic marketing abilities, to get it 15 to 20 cents and do another raise over the next 60 to 90 days at say the 15 to 20 cent level.
The Zonia project, I mean, it was a producing mine, as you said. I mean, it's all been pre-stripped. It produced from the mid-60s to mid-70s. Why was the mine shut down?
The reason the mine shut down, it was being run in the 60s and 70s by a company called Alistair Oil and Gas Company. In the 60s and the 70s, a lot of mining efforts were actually run by oil and gas companies because they had so much money in the 60s and 70s, and they had either right-of-ways or roads into these places, and the permitting was really non-existent. They could go in and ask for a permit and do whatever they wanted, although these guys seem to be fairly responsible. The Alistair Oil and Gas Company shut down because copper was at 35 cents a pound. They put that last layer of copper on top of the leach pads of 7 million tons, and they didn't have enough money left for the acid to process it. Is what the reports are intimating, right? They didn't process it because they ran out of money. Like most enterprises, the reason you stop working is the economics don't work. You shut it down. Now, between 1966 and 77, when it was operating, they produced 33 million pounds of copper. So, that's not a lot when you're getting 35, 50 cents a pound for it, I think was the average at the time. It's not a lot of money, right? But your costs are a lot lower in 66 and 77. And it was an oil and gas company, so they had lots of money to plow into it. So that's the answer to that. That's why it shut down. They ran out of money.
What are the royalties on the Zonia project?
There's only one royalty that exists on Zonia, and a company called Electric Royalties has a half of a percent royalty on Zonia. They have the ability to get another 0.5% for a total of 1% royalty, but they have an existing 0.5% royalty is the only royalty that exists on Zonia. So it's not owners.
So could you just give us an overview and of the available infrastructure, especially with regards to power, roads, and also of course water?
Yeah, as I alluded to, or as I pointed out in the presentation, there's a power line that runs right through the property. That power line is we're fairly certain it's not going to provide enough power for us to run a SXEW. The difference is that we own the right of ways. We actually own the right of ways on where the power lines run through. We have a right of a 25-foot. Sorry, it's a 50-foot right of way. 25 foot on one side, 25 foot on the other. We own a 50-foot right of way for right through where the power lines run. So if we find that we're probably going to have to upgrade the lines. Now the substation that powers those lines sits at the opening to the road of our project. So it's literally a mile away or less. We may have to upgrade the substation and add some equipment to power an SXEW, and we may have to add more lines, more wire to push that power through. However, the fact that we own the right of ways, what that might mean is we might have to, those poles that are in that picture are wooden poles. We may have to replace those with metal poles to carry more wires to the project. The good thing is that we own the right of ways, so we can do that anyway. We don't actually, we'll need to get a permit for it, but the fact that we own the right of ways is part of the permitting process. So the fact that the substation is less than a mile away, and we have the right of ways of the pathway of the poles, existing poles, gives us an advantage to get the power that we need quickly and easily to the project. On the water side, we have a one well that sits on the property now. We think we'll need 3 because it's producing. We need 100. Sorry, is it 100? 900 gallons per minute is what we're going to need. 900 gallons per minute. Right now, we have 300 gallons per minute out of that one well. Our hydrologist guys that are working with the permits, and we had them on site 2 months ago, said that they believe that there are 2 other sources of water on the property. So we can ramp to 900 gallons per minute. So we're fairly confident. They're doing those studies now. So the fact that we have a third of the water that we need flowing is good, but we believe that we can sink 2 other wells to get it up to 900, which is what we'll need. So power on site, water on site, and as you said, pre-stripped.
Well, let's talk about what could unlock this product, or at least make the capex a lot cheaper. The ore or the mineralized material that's on the leach pads. So with the 33 holes in your RC program that you're going to do, what confidence will that get you?
If the 33 holes, those 33 holes, if they come up with 7 million tons at 0.3, we would be able to, Sue Bird, who's the resource geologist, tells us that she would add that to our resource. This is a program that we're undertaking to verify that we have that number of holes over that distance at those depths. If they come back and tell us that the metal is still there. Now, metallurgists I've consulted with 3 different metallurgists who told me if they actually crushed this material, put it on the leach pads, but didn't process it, then there's no place it could go. It's still got to be there. It rains. It's sunny 300 days of the year in Arizona. It barely rains. It does rain. It does have a rainy season, but rain is not going to leach your copper out of that ore. The only way you can leach it out is by using a sulfuric acid solution, a weak sulfuric acid solution, and that's not what you have over desert. There's no acid rain there. So he said it should still be there. Where would it go? It doesn't go anywhere. Now, by verifying this, by drilling it, if I get 1,600 feet of mineralization, or say it's 1,200 feet of mineralization, and it's 0.2, 0.3, it's still free money. I call it free money, because then I'll just bulldoze. I'll bring in front end loaders, pick up that material, move it to a new leach pad, and I'll have it processed as soon as I get my permits, which is in 30 months. I can't do anything until I until I get my permits. However, if I can verify that I've got 7 million tons at point 0.3, which is, and it turns out that it's between the 26 million pounds and the 35 and the 55 million pounds, I'm guessing right now, and these are all forward-looking statements. But if I can verify that there's 35 million pounds of copper on that leach pad at $4 copper, that's $120 million worth of copper. Now, there's going to be costs for me to move that. There's going to be costs for me to process it with the portable SXEWs. I'm thinking about bringing in. There's another way to do it. I could turn it into a sulfate solution and ship it down the road to Carlotta, who wants to work with us, and toll mill it through Carlotta's SXEW. That's going to cost me, but I'm going to get something out of this as long as I verify that the material that was laid there, the copper that laid there, is still there. And as soon as I verify that, the market, because I've been working in the markets for 50 years, I know the market, and the market will say, if you have $100 million worth of metal in that on those leach pads, we will discount that and give you $30 million worth of value or $40 million worth of value in the market. It will impact our valuation in the marketplace. It always does.
Okay, so just to confirm, so the drilling will be enough for you to put it in, include it in the feasibility study in the mine plan?
Exactly, yes.
So what's the timing of the drilling and also timing of announcing the results?
So the plan on drilling is to get drilling as soon as possible. My issue, as I pointed out to you, is I have $1.2 million. I could spend the whole $1 million on the drill pad, but then how do I tackle my G&A? I'm really reticent to do a financing at 7 cents. I did one of those. I think I need to get this story out, get people to understand the value, move the value to double the value where it is today, 15, 20 cents, 15 cents, 20 cents, and then do a small round there. And I say small round, a couple of $1 million at that level. And I'd like to do that by, October, November. So once I've done that, and because it's Arizona, I could start drilling in November, December down in Arizona. And it's a 4 to 6 month process because it's not a typical drilling process. So I won't have the results from it until February, March, April of next year. But as soon as I get those results, if they verify it, bingo, we move forward.
Do you have any very, very rough estimate of what, the all-in sustaining cost per pound could be on the copper on the leach pads?
Yeah, so as I said before, you're not crushing it. It's already crushed. So I'm just basically scooping it up and putting it in trucks on the leach pads, moving it to the new material. Transportation of ore is a big part of mining cost. I'm not transporting it very far. If I was, again, this is forward looking, if I was going to guess, it's going to be at least $1.50 a pound, at least, to move it and maybe even $2 a pound to move it and process it. So that leaves me half of what that. I mean, in terms of profit, that leaves me half of what is on the leach pads now at $4.
So then, if we speak about, you just published a new mineral resource estimate. You haven't done any drilling since, but you did a change in the modeling. And so could you explain what changed, cutoff grades, indicated, inverse inferred, strip ratio, how you modeled it, etc.?
Yeah, so what happened was we brought Sue Bird in, as I've mentioned her many times, and again, she's used by a lot of major mining companies to look at their resource valuations. Luckily, she worked for Derek and she worked at Carlotta, and she was available for us. She came in and she looked at the last resource that was done for us by Hard Rock Mining, Hard Rock Consultants, and she didn't understand, and even our geologist John Drobe didn't, and has never understood their how they got their valuations in when was that resource done? That was done 2022, I believe. Yeah, that was a 2022 resource valuation from Hard Rock Consultants. And I didn't get it when I looked at it. And, I've been doing this for 20 or 30 years, but I looked at it and I said, wait a minute. The company drilled 75,000 meters of drilling in the pit. It did it at 15 meters spacing. And you only came up with 75 million tons in measured and indicated and 122 million tons in inferred. How is it possible that you could have 75,000 meters of drilling, 15 meters apart, and only have 75 million tons of that in M&I and more almost double that in inferred? It made at that spacing, it made no sense to me. So I talked to John. John said, well, yeah, I challenged him on it, but no, the CEO didn't and the board didn't, so we let it go in 2022. So I brought Sue in, and Sue talked to them, and Sue went down and looked at the core and looked at the data and said, this doesn't make any sense. You can't have that much in inferred at 15 meter spacing and 7,400 meters of drilling. So she recalculated it and came up with 130, moved 50% higher to 113 million tons in M&I and dropped the inferred and dropped the inferred to 75. Yeah. And so that's how we did it. Now, to move the rest of that inferred into indicated, I'm going to have to infill drill. And that's planned for next year. And that's in my timeline, as I said in the presentation. I've got to move that. It's not a lot of drilling, but I need to move it into M&I. If I'm doing a bankable feasibility study, I need as much of that material in M&I as I possibly can. 113 is not bad, but I'd like to have, 180 million tons or 190 million tons.
How did you change the cutoff grade in new resource, and also how did the strip ratio change?
The cutoff was at before it was at 0.125, and we moved the cutoff up to 0.18 on the base on a base case on the base case. So that changed the strip ratio from 1-to-1 to 3-to-2, 3.2 to 1. That's basically on everything that's in the private lands. Again, remember, the strip ratio in the pit is still 1-to-1 on a practical basis because the ore is sticking out of the ground. That stuff that you see and that you saw in that long picture where it's kind of a purpley color, which is on a 45-degree angle, that's all copper ore that's sticking out of the ground. And that's for the length of the pit. You can see that. So, and that's where the high grade 0.5% copper section is, and that's where you would start. So you would start high grading immediately and taking that stuff out at a 1-to-1 ratio and take it out total.
How much more conversion drilling do you think is needed, and also prior to the bankable feasibility study? And do you have any idea what kind of cost that would be?
Yeah, unfortunately, I've got too many balls in the air. I haven't really looked at we just got the resource study. We just put it out. I haven't sat down with my team. I'm actually, to be honest with you, I haven't really delved into that yet. And the reason for that is I know I have to do something to move my inferred into M&I on the private land in that pit. But my focus I'm a guy that's focused on the market and how it can add more value. can I add more? Will I add more value? I ask you, Jasper. Will I add more value by moving by having figuring out an infill program right now and figuring out how to start that and moving my inferred into my M&I? Or will I get more value by figuring out my program for the metal that's on those leach pads and what that value is and getting that value into the market? I can tell you in my year's experience, if I tell the market that I've moved 25 million tons of inferred into M&I through an infill drill program, the market's going to yawn and say, thanks for doing that. If I tell the market that we've verified that there's $100 million worth of metal, even if it's going to cost me half to $2 a pound to recover it, which is 50 million bucks. You tell me where I'm going to get better value in the marketplace by focusing on one of those programs or the other. That's why I haven't focused on my infill, because I haven't gotten there yet. My priority is to verify the metal on those leach pads, because it will give my shareholders more, and myself. I'm a big share. I've got a lot of shares. I'd love to see this thing at $1, right? And that's where I want to get it. So, and I can get it there. I can move it there by adding $100 million worth of copper on leach pads ready to process.
Metallurgical Testworks use. I mean, the cover is currently sitting at 73% for the copper. What room is for recovery improvements?
So I've been told by Sue, again, Sue Bird and Derek and Joe Phillips, that they believe that the recoveries that we are seeing are lower than they could be, and that comes again from the people who are talking about this are working 100 miles down the road at Carlotta, and they're getting 80% recoveries from their rock. Now, it's not the same rock. It's not the same ore, but they're pretty confident that we can up that recovery, to the 75-80% range, and that would be helpful. So again, what the plan for that is next year, to take some material out of the pit, to go to leach pad number 1 and build a little bit. There's a berm there anyway. We build it a little higher, put a test leach pad liner down, and get it set up, and crush that rock and send it and put it on the leach pad and just test it on site to see what kind of recoveries we get, and we'll know real time then what we're working with.
Could you just give us a rough outline of what you think will change in the bankable feasibility study compared to the PEA?
Well, I think what will happen is the life of mine will increase significantly. The recoveries, as I just said, hopefully will go up. The value, of course, the MPV, and again, that's really going to be a function of what the of what the commodity price is. But I mean, given where the last PEA was done at $3, and the current state of the copper market, you're going to get a completely different, a much higher valuation on the project. Your throughput probably is going to stay about the same. It might get a little higher at 30,000 tons a day. And I think that's kind of optimal for us now. We could run, if we do get more, if the bankable would allow for an increase in daily throughput. We would consider that. You just have to balance that out with what the costs are, right? I mean, how is that going to increase my capex? If I'm going from 30,000 a day to 50,000 a day, does the increase in capex justify the return that I'm going to get on my cathode production? Bankable will also give us a lot more information on my hydrology, my geotechnical, my my engineering plan, my construction plans. I'll have a lot more information on my bankable feasibility study to give valuation to provide valuation numbers than I do today.
Zonia North, is it drill ready, or do you have any more target generation activities or geophysics, that you would like to do before it's drill ready?
That's all been done. We know targets. We know exactly where we want to drill. John Drobe, as I said, has been doing this for a long time. There's been geophysics done. They've done there's lots of sampling that's been done. There were 4 holes that were previously drilled. So as I said, they came out at 0.35. So we know where we want to drill. And again, my only caveat about the economics of that area, it's BLM land, is can you make an economic argument for working in that area given the potential strip ratio, and which I don't know.
The Zonia project is on private land. Could you walk me through the entire permitting process and the length of it?
So Myron Smith is the one who's handling that. Again, another Carlotta experienced guy. He's already started on that. You got to start with an environmental, an EIA, an environmental assessment, which means we've got to go through the whole area. We've got to log plants, flora and fauna. So we have to hire a consultant. Well, he will do it, and he will direct the consulting company to do that. We have to do hydrological testing for the permits, and we've already had the Arizona water quality ADEQ, Arizona Department of Water and Water Equality guys on. They've been there twice. I was there when they were there. They say that we're fully, everything we've got on site is fully up to speed. We're good with our our water ponds and all that stuff is all good. They've blessed those and they've signed off on them. We do have to look for other sources of water, which will cause it again is a more hydrological. We have to get permits to process metallurgically. Have to get to actually put a plant in place. We're going to have to give them plant plans, etc., operational plans. This will take. Byron's telling me it's a 30-month process in which we've already done 4 months of it. So, we've got 26 months to go. And he's firm that can be done in that time period. So, again, it's environmental, particularly water. The power comes into it too, because you've got to make sure that, if we're going to change anything on the power poles, that's done environmentally as well. If we have to move wooden poles, they have to be discarded, all that stuff. So the permitting process involves just that, and will take about 30 months.
How's the local community relations, and what communities do you have in the vicinity?
The area around Zonia is owned by the largest cattle rancher in Arizona. And that family has owned that ranch since the 1930s. So it's the same family. And they allowed the McAllister Oil and Gas Company and the Redstone Company that was producing there in the 90s, was working there in the 90s. They allowed them to work there, and there's been no problem. We have our own access road. We've got our own gate. You can't get around the gate. There's fences up each side. The only thing that we have to do in terms of our neighbors is, because cattle wander onto the property, we had to make sure that they had water. So there's an agreement with the cattle rancher. As long as we have 6 watering spots on the project somewhere where the cattle can roam and drink, then there's no problem. So we don't really we're in the middle of nowhere. There is no community. Prescott is the closest community to us. Actually, there's another community that's up the road. They had big fire. I have to remember the name of it. They were in a movie where a bunch of firefighters died when a fire roared up a mountain. And I'm trying to remember the name of the community, but we don't have any problems with the locals. In fact, we are hiring some of the locals to help us from that fire station up the road to help us. So the community. Now, the caveat again, there's always a caveat. Arizona is the most prolific copper producing state in the United States. Having that designation means you're going to get NGOs, non-governmental organizations, who will stand up and say, "Hey, if you're going into production, we don't think it's a good idea." We haven't had that yet, but we're anticipating that some NGO will stand up and say, "World Copper should not go into production because." We are trying to stay ahead of that by getting our permitting online, and I've hired a local PR company that's worked with other copper producers in the area to get us ahead of that curve by going out and getting in front of and telling any communities in the surrounding area within a 20, 30 kilometer range to say, "No, we're World Copper. It's a past producing mine. It's a SXEW operation, no tailings, no smelting. It's fairly environmentally closed loop system, so it's not going to hurt the groundwater. There is always dust when you mine, particularly open pit mining, when you're blowing things up. We want to reduce that amount of dust with it any way we can. So yeah, we're going to be. I've spent a lot of my career working with ejidos in Mexico and the locals in Bolivia, the local the local communities in Bolivia, and getting them on side. It's a process, but you got to start from the beginning.
Say that you received your final permits then in the beginning of 2027. How long do you expect the construction period, commissioning, and also ramp-up period to be?
So I have a consulting firm in Arizona that we met with last time I was there. They said that they built an SXEW in 12 months. I've allotted 18 months for it just because, but they're adamant that they can build an SXEW in 12 months. So if I get my permits in 2027, in late 2027, it'll be built in late 2028 or by mid 2029.
Yeah, and ramp-up period should be quite quick, I assume.
Well, again, it's a chemical plant. It's not the only thing that's really holding you back on ramp up is your leach time, right? I mean, when you start leaching, the leach material doesn't just sort of show up at the bottom. You got to be cognizant of your fines to make sure that you don't have issues with your fines blocking your percolation speed. But it can take, to start getting material that got enough quantity, copper quantity to process. It can take a couple of months, right? So it can take a couple of months. So you've got, you can get it up, you can have it ready to turn on in 12 months, but you probably aren't pouring your first copper cathode until a month and a quarter, to be honest.
Yeah, I mean, this is also difficult to say now, but maybe you have a very rough ballpark, interval on what all-in sustaining cost could be.
So all-in sustaining cost, I had trouble with this because it's again a very forward-looking statement, and I don't think I have enough. I really don't have enough a handle on. My BFS is going to tell me is going to have my construction costs, my engineering costs, what the flow sheet's going to look like. Flow sheet's pretty simple because it's an SXEW. But what are my all-in sustaining costs going to be? What my throughput, what that's going to be? There's too many variables right now that are unknown for me.
Do you have any expectation on the initial Capex?
Yeah, Capex I do. I mean, as I said before, the PEA has it at 250 million, but that was 2018. And you've got a lot of inflation in the last 5 years. I would add another 50 million to it. I'd say the cost is going to be about 300 million. Oh, both of my technical advisors shake their head and look at me and go, no, we can do it for 250. But, we're all used to the government coming to us and saying that we're going to build this new bridge for you for $1 billion. And by the time they're finished, it's $3 billion. I'd rather overpromise and underperform. So I'm not going to, even though my advisors are telling me they can definitely, and we drove there for hours and they went through the numbers with me on what my trucks and scoops or how many trucks and scoops I'm going to need, what kind of crusher, what kind of rotatory crusher I'm going to need, what the leach pads are going to cost, what the stackers are going to cost. They broke it down for me, and they say, we may even be able to come in at less than 250, and I'm telling them no, I don't believe it. I'm saying 300 million.
I mean, you have certain activities that you need to do in order to get Zonia in production as soon as possible. But that, as you say, I mean, infill drilling isn't really what the market rewards you for. Will you do will you do anything to just fast track the development, ultimately get a construction decision, or do you think along that way, capital like Zonia North, capital will be spent on other activities that would sort of might be better in terms of actually creating a rise in the share price?
The leach pads are key in terms of adding value in the short term. Zonia North will make it bigger, but will that add value to it? I think probably. If you make it bigger, people will give it, if it makes it a large valuation. At the same time, infill drilling also moves my resource to a place, moves my inferred into my indicated, which helps my BFS, right? It makes my BFS more robust. So the question you're asking is one of those questions where, yes, I would love to expand the whole thing and make it bigger for value on a value basis, but the real value on a feasibility study basis is really going to come from moving that inferred into as much inferred into M&I as I can if I want to fast track it. So I'm kind of caught between how many holes do I put up to the northeast, in contrast to how many holes I need to infill to move the inferred into indicated. It's a balance. I have to figure out what that balance is going to be. My preference would be, to be honest, is to fast track the infill drilling to move my inferred into my indicated to push the BFS. Having said that, what your question really was how do you add value? Moving my inferred into my indicated and pushing that into a BFS is not going to add as much value as going to Zonia North and making it bigger. So I'm in this box of how do I do this, and we'll work our way through it. And it'll take a little bit, probably more time, and that may slow my two process tracks down and add more time. But as I just told you, under promising and overperforming is what you really need to do in setting expectations in the marketplace. So I'm hoping that we've got all of our permits by 2027. So that we can make a construction decision on a BFS and be in production in 2028. If I drill the northeast or to the northeast, will that slow me down? Probably. So I have to make that decision. I haven't made it yet.
Would you consider bringing a joint venture partner to the Zonia project to advance it?
Yeah. Given the valuation gap that I showed during the presentation between us and our peers in Arizona, we're like 20 times undervalued in some cases. What happens when you have the kind of asset that we have, particularly at Zonia, is you start getting lots of other entities, strategics, and potential asset acquirers knocking on the door. So right now we have quite a few people asking us if we want to either enter in a transaction, particularly for Escalones, We do have a couple asking us about if we'll want to do some kind of a business combination, particularly focused on Zonia. And we do have people who are asking, we do have companies that are asking to either do some kind of an earn-in on Zonia, and these are bigger companies, or actually a strategic investment. Now, the strategic investment groups, there's two of them, are fairly new, and I haven't gotten any kind of sense of what they really want and what it means. The asset acquisition couple of groups are looking at Escalones because they like Chile, they like the size of the project. These are bigger players too. Like one of the players is a large multinational, which is the seventh largest producer of copper in the world. The issue, it's not an issue. We certainly, if we have any kind of offer for the company or an asset, we have to consider it if it's serious and if it makes sense. Like transacting Escalones, because it's hard for us to add value to it, could mean a capital infusion into the company, which is non-dilutive, right? We spent $15 million on Escalones, and if in my work in this business, if you get 20 cents on the dollar on the money you've put into a project, you're actually doing not bad. But the indications are that at least one of these players is possibly looking at twice that amount, 50 to 75% of the money we spent. So if we can get that kind of capital, non-dilutive capital into the company at this time, would be very helpful.
So your plan for the Escalones project is to sell, or that at least that's plan A, so to say, to sell it.
Well, I mean, what am I going to do with it? I mean, the government really hasn't told me what a sanctuary of nature is, and again, we're assuming that at 18 months to get a permit, it's now going to take us 2 to 3 years to get a permit. I've got option payments, which are based upon added value with Escalones, which I can't achieve because I can't drill it. I've got good numbers, but they're all inferred. I've got to get them into the M&I, which requires me to get a drill permit and do some infill drilling and some additional drilling at Escalones to move it forward. If I can't, why am I paying $3.7 million for an asset that I can't increase the value on? It makes no sense. Now, having said that, we're a small junior. There are larger entities. Like I said, one of them is a seventh largest producer of copper in the world. Another one is a midterm copper producer who have production timelines that go out to 2030 and 2040. They filled 2020 their 2020 pipeline. They're looking at filling their 2030 pipeline. So for them to pick up Escalones for $8 million or $10 million, it's not a lot of money for them. They're bigger companies. They can push it into their 2030 pipeline. And by the time it gets to 2035, you'll have had 2 more government turnovers anyway in Chile. So they're counting on the fact that eventually they could get this into production, and they like the numbers. The numbers at Escalones, even though they're inferred, are excellent numbers, right? So that's why we're getting attention.
I mean, that would be the by far best solution if you could sell it. Get, I don't know, 7 million US. You can put that into the ground at Zonia and advance that further. And that would best. When do you think? So I mean, so obviously, these 2 groups that are your leading horses. They are obviously not concerned about the sanctuary of nature. What's their I mean, do they have much more due diligence that they want to do, or is it just sort of where are we in the process really?
They will both want to do more due diligence. Both of them have done. One has done quite a bit of due diligence. One of them has been on the property once and is looking to go on the property again in November, and they've gone through the database, our data room. So for them to come back a second time means that they are serious. The thing you have to recognize is this is a big company, and I liken them to big cargo ships in the middle of the ocean. They take a long time to turn. If they have to turn around, it takes them a long time. So, I'm not talking about getting this done with a large major in 4 or 5 months. It might take 9 months, and it may be shorter. But my experience is that they take a while. And my experience with with looking at some kind of a business, an economic transaction or a business transaction, be it a project acquisition or a merger, take time. So my focus can't be, I certainly have a team a corporate development team that's helping me, deal with these groups. But my focus is to get the value quotient into the stock now that's missing as quickly as I can using traditional marketing methods, which is these kinds of conversations, talking to investors, talking to strategics who will take a position themselves. So yeah, the probabilities, or the potential is there, or the trend, the discussions are there, but in my experience, 25% of they only actually conclude 15 to 20% of the time.
What kind of companies are interested in Zonia?
Okay, so I'll go through them. One is I'll call it, I won't use the names, but it's a European-based company. It's trading at about 150 million market cap. Trades on the London Exchange. Share price is about one Great Britain pound. They may come in and take a strategic position in the company, or maybe looking at a merge. They may want to merge. They're a copper gold producer, and they want to get out of their jurisdiction and in a U.S. jurisdiction. There's another group which is a Eastern European group. Both of them are Eastern European. That's the one that's the large one. Again, I won't use their name, but they're the seventh largest producer of copper in the world. There's another one that's actually Arizona-based, or has assets in Arizona. They're actually coming to us and looking at not the oxides, but they think that they're looking for the source of the oxides. So they've approached us and said, we would like to look at potentially an earn-in situation where we would write a check to you for shares, and then we would conduct a drill program, $10 million drill program on your project, looking for the sulfide source of this oxide pit. That again, and it's a very large company. So if we announced that we had an earn-in agreement with a large copper producer that wanted to give us $3 million in cash and do a $10 million drill program, that's going to help my shareholders. It's going to help my stock, and I'm going to get cash. Yes, it's dilutive cash because they'll want to earn in, and if they find what they're looking for, then first of all, we would get a lift in our valuation, and if they drill and we put those drill results are good results, that's going to help us as well because we'll have to publish those. And then by the time they decide that what they're looking for is there, you're hoping that they make a bid for the company, right? So that's another one. There's another group out of Australia who basically came to us and said they're actually the third group that are looking at Escalones. They're fairly recent. They came in, but they're not like the producers. This is a fund out of Australia that has said, let's look at Escalones. As soon as we explained to them about the sanctuary of nature, they kind of said, that's going to be tough for us to deal with because they don't have a production pipeline like these other groups that they can push it into down into 2030, 2040. But then they turned around and said, and I've been talking to them for a little while, what about if we decided to make a strategic investment for your build at Escalones? So they're considering that. Again, that would be a non-dilutive. I don't know, that wouldn't be a non-dilutive. They would want a piece of the company for writing, and I don't, and it's early stage with them. I know how much money they have. It's significant, but I don't know what percentage of the company they might want to invest into. So that's just, I think, 4 or 5, and I've got another 2 or 3. There's another one coming. Oh, there's one out of Japan. There's a Japanese conglomerate that's approached us, and they really like Zonia, and they've told us that many times. They're in the data room right now. So what happens, again, as I was saying, Jasper, is when you've got an asset like 2 assets, Escalones is a good asset. It's impaired by the government, but governments change. But you have Zonia that can produce 70 to 100 million pounds a year of copper in a great jurisdiction, in a market that needs more copper, and you can get this thing into production in 3 to 4 years. There's a lot of people. I've got a lot of calls. I'm juggling a lot of calls right now because they think they can get it at a discounted price. And my job is to reduce that discount by getting the share price moving because of the value of the asset.
As you said, these groups take time because ultimately you will have to do a financing probably in the next few months, like 2 months, I think you said. Yeah, do you think that the things that you're talking about, these would probably happen after that, or how, in terms of sequence?
My guess would be they would happen after that. My goal right now is to get this stock, to get the share price. We're trading at 6-7 cents, which is ridiculous, but I'd like to get it to, as I said, I think I said earlier in this interview, to the 15-20 cent range, and then do a financing there.
What catalyst do you think will be? Do you have any catalyst that will come in the next 2 months, or anything besides just general awareness and talking to investors that could, get a rise in the share price?
Yeah, talking about the undervalued nature of the company compared to my peers is one angle or one aspect that I'll be talking to investors about. But the catalyst that you can look forward to, the most important one is the verification drill program on the leach pads. Now that won't happen. It won't start if we market this properly and we get people to understand that there's somewhere between $75 million and $200 million worth of material sitting on those leach pads for us to process. And we announced that we've started the drill program, which will happen in the next 60 days. I do have to raise some money for it, but that's okay. I'll be able to do that. I think that there will be some investors who will say, we'll want to front run the potential results from that program and start closing the gap on the value basis to our peers. So that catalyst, that's our biggest catalyst for World Copper in the next 4 months. So it's starting the drill program and getting the results from the drill program in 4 to 6 months. If those results give us what we think it will, and it lays out that there's $75 million to $150 million, $200 million worth of material there, then as I said earlier in this interview, I've been working in the markets for a long time, and the markets are going to give us some kind of increased valuation on that. It can't not just say, so what? You got $100 million on the ground that you can process in 30 months. It'll say, well, you know what? The market will give me some percentage of value of that, whether it's 25, 50, 75, it doesn't matter. From where I am today or where I will be when I announce those results, it will give us a lift. And so that's a very big catalyst. And I'm anticipating that the lift will be more than 25% of what that value is, what the leach pad value is, or at least 50. So if I got $100 million of value in metal on those leach pads, I would expect, given the experience that I have, the past experience in the market, to give me 50% of that value and give me $50 million in market cap. That is a fairly large catalyst. After that, however, we go into with Zonia, the BFS studies, permitting, metallurgy, water studies, hydrology, electrical studies, gap analysis. That kind of work when you're trying to put these things into production are not really market catalysts. It's a lot of consulting work, engineering, desktop work. So the company needs to have another catalyst generator for the while we're putting Zonia down that bankable feasibility study routine. And where that's going to come from is, as I may have said this earlier in the interview, I'm not certain, but we're looking at another asset to fold into the company that would allow us to have more of an exploration play as well as a development play. While you have your development play, you really want a good exploration play that can keep the market excited and interested in the company. And we'll have that by the end of the year as well. I got a call on one this morning. I think I may have mentioned I was looking at one in Montana, and the kind of numbers that I'm looking for, and they're hard to find, but I did find it. I didn't get it, but they do exist. Was in Montana, it was 100 meters of 1% copper, with including 50 meters of 2.25% copper. If you go out and start drilling those kinds of holes, and you have to get money for a drill program, but if you've got those kind of numbers, you'll get the money. I'll be able to get the money to go out and drill those kinds of holes and present those to the market. That is what underpins your development project while you're exploring on a new project. Now, I haven't got that project yet, but as I said, I got a call this morning, and I think I found another one, and we'll probably have it by the end of the year. Well, we will have it by the end of the year.
So I mean, I get that you want to combat the slowdown part of the Lassonde curve, but I think also, I mean, at your at least as it's now, your market cap doesn't give you the luxury to sort of advance two projects at the same time, one development, one exploration. So how are you thinking about that, and also what kind of cost do you think that would entail to get a new project?
It's a little hard to say. My costing on the development project, you're right. given my situation right now, my current treasury, and the fact that I want to develop Zonia, I'll need to increase valuation, get more eyes on it, and get more money just to do the BFS, because that's going to cost me next year on those studies is going to cost me at least $5 million minimum, more like $8. And then the new asset that I'm bringing in, I'm anticipating it won't cost me. I don't know yet what it will cost me, but if it's a good project, if it's got existing good numbers, and you put those numbers out to the marketplace, you can get. I will be able to get the financing I need to do both. I can do Zonia, and I can actually set up a drill program for this new project that we're bringing in. Now, how much that is, I don't know yet, but I will be able. There are ways to do it, and we'll be. If I got a project that had 100 meters of 1%, the market's going to give me money to keep putting out those kinds of numbers. So I'll be able to get the money.
In other words, you don't think that adding a new project, even, I mean, if it's a great project, yeah, that will surely be accretive, as all great projects are. But yeah, that wouldn't capital or cannibalize or delay the development of Zonia.
You really can't. It might slow it down somewhat, depending on the asset. If the new copper asset is so compelling, and again, if you're pushing out numbers of 50 meters of 2.25% copper in this copper environment, you're going to get people that are going to want to participate in that. And does that mean they just want to put the money into the exploration play? It probably will drive it. But I'm hoping by the time that I get there, I've started my. Well, no, I will. I know that I will be by the time I get there. I will have already started my Zonia leach pad verification program, which hopefully will give me some lift in the marketplace, reduce my cost of capital by increasing my share price, and give me enough capital to do both. It may impinge. Again, I have since I've gotten 3 projects that I like. the drilling, the depth of the drilling, most of the drilling on that one in Montana was started at surface. It wouldn't, I don't know what the size of these drill programs are going to look like, so I can't really comment on whether I will have enough capital, and whether it'll cannibalize. I just don't know how the two are going to balance out.
By the way, what probability would you assign that you have that you have one of the following events would happen within 6 months? Either you get a strategic placement, or that you get some type of earn agreement, or that you sell Escalones, or some other sort of strategic events will occur within the next 6 months.
Again, my experience is these things. The strategic investment might happen fairly quickly. Any kind of business combination or asset transaction would take 6 months anyway. Even if we announced it before Christmas, it's going to take another 3 months after that. But if I have an LOI or an MOU from one of these people, it's going to have an effect again on the valuation of World Copper's share price. I see that something, given the the low valuation that we're carrying right now, something will happen before Christmas, and I think multiple things will happen before Christmas. I think that we'll get a strategic. I think that I'll announce I'll have enough money to start my strategic or my verification drill program, and I'll have a new project. I think those three things will happen before Christmas.
Where do you envision World Copper in 3 years?
In 3 years' time, we will have moved the material, excuse me, from the leach pads, the copper that sits on the leach pads, to a new leach pad area. We'll have started to process that, and we'll be generating revenue from the existing metal on those leach pads. We will have a bankable feasibility study, and in 3 years we will have but in 3 years we'll be at a construction decision. We'll have mine planning, construction, geotechnical, metallurgical, BFS. That'll all be done within 3 years, and I think we would probably start construction just after 3 years. And my consultants down in International Mining Consultants, IMC, in Arizona, tell me that they have just recently finished building an SXEW in Arizona in 12 months. So between 36 and 48 months, we should be, we will be producing copper in 36 months, in 3 years, from the leach pads, but from the pit going into the new operation, we will be producing new material from the pit itself, not from the leach pads. That's in 4 years.